Are you feeling the weight of a poor credit score? Have you been faced with high interest rates, trouble renting apartments, or even obstacles in your job search due to a less than stellar credit score? If you've clicked on this video, chances are you're dealing with a bad credit score. Don't worry, we got you. Welcome back to our channel. Today we'll talk about the actionable steps to fix a bad credit score quickly and make sure you steer clear of common mistakes that could bite you in the back. Before we begin, kindly consider subscribing and turning on notifications to stay updated with our helpful content. If you like what you see, a thumbs up would be much appreciated. Now, let's get started. What is your credit score? The first step towards fixing a bad credit score is understanding what it is and the factors that influence it. Your credit score is a 3-digit number that lenders use to assess your ability and likelihood to repay borrowed money. It's based on the information in your credit reports and can impact several areas of your life, from the interest rates you've offered on loans to your eligibility for certain jobs or rental applications. In the United States, the most commonly used credit score model is the FICO score, which ranges from 300 to 850. A score of 740 or above is considered very good and is usually sufficient for most purposes. However, a score below 670 is typically regarded as a bad credit score, indicating a higher risk for lenders. Your credit score is calculated based on 5 primary components, each contributing to a specific percentage to your overall score. 35% is payment history. This factor represents your track record for repaying your debts on time. Late payments, defaults, and bankruptcies can negatively impact your score. Therefore, it's crucial to consistently make all payments on time. 30% is credit utilization. This ratio compares the amount of credit you're currently using to your total available credit. It's advisable to keep this ratio below 30%, as high utilization can suggest you're over-reliant on borrowed money. 15% is length of credit history. This represents how long you've had credit. It's calculated from the age of your oldest credit account, the age of your newest account, and an average age of all your accounts. Generally, a longer credit history is favorable as it provides more information about your borrowing behavior. 10% is credit mix. This measures the diversity of your credit accounts, credit cards, retail accounts, installment loans, and mortgage loans. Having a variety of credit types shows that you can handle different kinds of credit responsibly. 10% is new credit. This includes hard inquiries or applications for new credit. Numerous hard inquiries can have a negative impact as it may suggest financial distress. Understanding these factors and how they contribute to your overall credit score is critical in improving your credit health. Now that we have a comprehensive understanding of what makes up a credit score, we can delve into the specific strategies to improve each aspect. Checking your credit report. Now that we've explained to you the factors behind the credit score, it's time to proceed to the next important step, which is checking your credit report. Your credit report is a detailed account of your credit history, including personal information, credit inquiries, and details about your credit accounts, all of which collectively influence your credit score. In short, it's the source document that forms the basis of your credit score. Once you've obtained your credit reports, review them meticulously for any errors. While it might sound unimportant, a survey by the Federal Trade Commission found that 1 in 5 people had an error on at least one of their credit reports. So what might these errors look like? They could range from incorrect personal information, wrongly reported late payments, to accounts that don't belong to you at all, indicating possible identity theft. If you find any inaccuracies, you should dispute them promptly, either with the credit bureau or the company that provided the erroneous information. Depending on the nature of the error, you may need to provide supporting documentation to validate your dispute. For instance, if you identify a credit card account on your report that doesn't belong to you, it's important to act quickly as it could be a case of identity theft. In such cases, apart from disputing the error with the credit bureau, you should also inform the credit card company of the fraudulent account. Remember also that recent IT failures at certain banks have caused disruptions and errors in customers' accounts, possibly impacting their credit worthiness. Hence, continuous vigilance and quick action are of utmost importance in rectifying any potential inaccuracies. Regularly checking your credit reports for errors and disputing them is a critical step in the journey to improve your credit score. If you like the content, please don't forget to like the video. This helps us a lot. Okay, let's proceed. Managing your debt and credit. Great, we've got a handle on credit reports. Now let's talk about managing your debt and credit, the pivotal aspect in shaping your credit score. First off, it's essential to recognize the importance of timely bill payments. Remember, your payment history contributes to 35% of your credit score model. One late payment can cause a significant drop in your score. Therefore, prioritizing on-time payments should be your top concern. To help with this, you could consider setting up auto pay for your bills so you never miss a due date. Next, you need to keep an eye on your credit utilization rate, a key player in the credit score game. This rate is essentially the percentage of your available credit that you're currently using. A lower rate signals responsible credit usage to the lenders. How do you accomplish that? There are a few strategies to consider. You could pay down your balances before the billing cycle ends, make multiple payments throughout the month, or even request a higher credit limit from your card issuer to reduce your overall utilization. But be careful with the latter. Increasing your credit limit should not be an invitation to increase your spending. If you're saddled with high-interest credit card debt, consider consolidating your debt with a personal loan or a balance transfer card. These tools could potentially offer lower interest rates, making your debt repayment more manageable. But always be cautious of potential fees and ensure the new interest rate is genuinely lower than your current ones before proceeding. Lastly, while it might be tempting to close old credit cards, especially those you no longer use, doing so could potentially shorten your credit history length and inadvertently increase your credit utilization rate, both of which can harm your credit score. There's a lot to take in here, isn't there? But managing your debt and credit card is a vital step towards boosting your credit score. If you're finding these strategies helpful, remember to hit the like button. In the next section, we'll tackle more ways to fix a bad credit score. Making payments on time. With an understanding of debt and credit management, let's now talk about making payments on time. Payment history is an indicator of financial responsibility to lenders, and one late payment can cause a significant drop in your credit score. This doesn't only apply to credit cards but also to other bills such as your utilities, rent, and any loans you may have. That's why it's crucial to ensure all your payments are made on time, every time. So how can you ensure timely payments? One method to stay on top of your bills is by setting up automatic payments, so you don't have to worry about forgetting due dates. This is especially useful for credit card bills as late payments can have a severe impact on your credit score. Autopay takes the guesswork out of remembering when the bills are due and ensures that you never incur late fees. Another strategy is to use alert systems. Many financial institutions and service providers offer alerts to remind you of upcoming due dates. You can also use budgeting apps that send reminders and even allow you to pay your bills directly through the app. In some cases, you can get credit for on-time rent and utility payments. Remember, consistency is the key in making payments on time. It's not a one-time thing, but a habit you need to cultivate. Over time, consistent on-time payments will help you build a solid payment history, demonstrating to lenders that you are a reliable borrower. Be careful with new credit. Now that we've covered the good practices, let's dive into a crucial area where people often stumble: managing new credit. Every time you apply for new credit, the lender performs what's called a hard inquiry or a hard pull on your credit report. These hard inquiries have the potential to temporarily lower your credit score. Therefore, applying for several credit accounts within a short period can cause a significant impact on your score. While this effect is temporary and typically decreases over time, multiple hard inquiries can give the impression that you're a higher-risk borrower due to potential increased debt. It's also essential to recognize that new credit doesn't just encompass credit cards and loans. It can also include cell phone contracts, apartment rentals, and even certain job applications. In these instances, knowing when a hard inquiry may occur can help you make informed decisions and minimize the potential impact on your credit score. Does this mean you should avoid new credit altogether? No, the key lies in strategic credit management. For instance, you may benefit from increasing your credit limit on existing accounts instead of opening new ones. But it's important to keep in mind that even requesting a credit limit increase may sometimes result in a hard inquiry, depending on the lender. So it's always recommended to ask your credit card issuer about their policy before proceeding. Now this brings us to another common misstep: closing old credit accounts. While this may seem like a good idea to close an unused credit card, doing so could shorten your credit history's length, which is another important factor in your credit score. A longer credit history typically boosts your score, so it's usually better to leave those old accounts open. When it comes to new credit, it's not about avoidance but about strategic decisions. With careful management and understanding of how credit inquiries work, you can continue to build your credit score effectively. Avoid these common mistakes. As we journey through fixing bad credit scores, let's turn our attention to some common pitfalls that can seriously affect your progress. Understanding these mistakes can help you avoid them and stay on track towards improving your credit score. Firstly, many people misunderstand the concept of credit utilization. While it's advised to keep your credit utilization below 30%, this doesn't mean you should max out up to this limit regularly. A high balance on your credit card might send a signal to lenders of potential financial instability. Aim to use your credit sparingly and pay off balances fully each month if possible. Next, do not disregard the smaller bills. It's not only loans or credit card payments that affect your credit score. Unpaid bills like utilities, rent, or even medical bills can end up in collections, which can severely damage your credit score. Remember, every payment counts. Lastly, don't expect an immediate rise in your credit score after taking these actions. Improving a credit score is a gradual process, and patience is the key. It takes time for these positive changes to reflect in your credit report. So don't be disheartened if you don't see instant results. Consistency and commitment are your best allies in this process. A crucial mistake to avoid is trying to game the credit system. Do not engage in practices such as credit repair scams or any sketchy tactics that promise an instant credit score boost. These might backfire and land you in legal trouble. To prevent habits like these, you can also check out our video about the money habits that are keeping you poor. Link is in the description box below. The steps we discussed today will guide you on your journey to improving your credit score and opening doors to better financial opportunities. If you found this video helpful, do give us a thumbs up. And for more videos like this, don't forget to subscribe to our channel. Now, if you want to learn the best credit card hacks that banks don't want you to know about, check out our video in the description box below. Thank you for watching and see you in the next video.